All right, welcome everybody to the Rice Report. Sorry we took a pause for a couple of weeks here, just busy time at work. As I always state, this is my opinion only. I run through a bunch of facts that I think the news is intentionally not sharing with you. That is my opinion. Whether or not they are doing it, I can't judge what they're doing, but in my opinion, it seems like they're hiding information from us that's very obvious to find, but not reported on any of the mainstream channels. I also do this for no money. I don't get paid anything for this. It's simply for you. Share it with your friends. Do whatever you want with it. Pause it, rewind it, take down some of the information I'm giving you. But my intention here is to go through some factual data in the market to be able to give you facts of what's happening in the world around you, to allow you to think critically about what you need to do in your own life. And at the end, I'll give you some opinion of what I think is the right move or the right place to go. It's by no means financial advice or tax advice, but it's certainly good logical deduction from the information that I'm about to share with you. So let's get started. Well, this week we're going to continue going through government spending because it is kind of the top of the pyramid, the tip of the spear of economic problems. Our government should be no surprise to anyone, spends like drunken sailors on a day off the boat, but it's getting worse. So about 4 months ago, we put together an agreement between both parties. I don't believe that there are two parties. I believe there's one party and they act their parts. But they made an agreement to spend a maximum of $4 trillion between now and January of 2025. We are already, 4 or 5 months later, we're already at $2.56 trillion printed since then. Just for those of you who don't know, every time they print a dollar, it devalues the dollar that's in your pocket. So we have $2.56 trillion printed by the US government since our debt ceiling negotiation, which was supposed to hinder us at $4 trillion. Think about that. Imagine if you only had $4 trillion to spend in a year and a half on wasteful spending. That's where we are. They have announced that right now they're about 40% under the mark for tax collections. That's important for you to note. The government has announced that they plan on collecting $30 trillion in additional taxes between now and the year 2030 to make up for the losses they're experiencing now. But don't worry, it's all transparent and totally mapped out for you, as illustrated by the Pentagon, who just recently failed yet another audit for $3 trillion of spending. They cannot account for the $3 trillion that they spend, but they're trying to put together tax laws that invade your Venmo account for every transaction you make over $600. Really think about that. We have seen real big reports coming out of Washington that are shocking to some, not to me. Our open border policy that we have in this country is not only destroying the country from a societal perspective, it's going to destroy this country from an economic perspective, and it's already beginning. Congress just released that we are spending $451 billion per year housing, shipping, feeding, providing hotels for illegal people in this country. They are illegal. I don't care what sanctuary law they're using, they are not legal citizens. And we are spending $450 billion per year. To put that in perspective, the nation of China, the second largest military in the world, largest navy in the world, spends $292 billion a year on national defense. We are spending almost 50% more on migrants, illegal migrants, than the nation of China spends on its own national defense. This will not end well. It's already beginning to not end well. So let's go into the banking sector that's tied to the Federal Reserve, who, by the way, Powell this morning stated that he does not see a rate decrease anytime soon, but he certainly sees a longer than expected pause. So the high rates that we're experiencing right now traditionally actually aren't that high. We're just high from the drunken stupor we've been in for a little better part of a decade with 0% interest rates. So don't expect rates to decline anytime soon, to be dropped anytime soon. I do expect them to raise at least one, probably two more times between now and the next time they drop rates. So that is something that's on the table. But this leads into banking, because banking is all done on lending. Banks make their money. The simple way that it works is if you put $1,000 in the bank, they're going to borrow $10,000 and go invest it in things. And if those investments don't work out, then your $1,000 is pretty much gone. And that time is approaching, in my opinion. Here's some stats on banking. This past week, today is December 1st, 2023. This past week, 64 bank branches were closed around the country. Leading the way was PNC and Chase. This is a big number, but traditionally we see hundreds of bank branches close on a regular basis and reopen somewhere else. We're not seeing the reopening, and that's a bit of concern. are a look at foreign opportunities in banking to understand what's really happening. In China, the Zhongji Bank just announced that they are $31 billion in loss. They also have in China's an interesting, a whole interesting episode I could do on the Chinese economy, which is far worse than people think. But the Evergrande debacle, second largest real estate developer in China, went bankrupt earlier this year. They just seized $1.5 billion in personal assets via properties in Hong Kong from the owners. The Bank of Japan just announced that they have $71 billion in unrealized losses. And I think the sentiment in America from the big four banks in this country was 71 billion, hold my beer. Our banks, our four biggest banks, just announced that they have $683 billion in unrealized losses, meaning they have losses that they have not baked into their books yet. They just get to sit them off on the sideline. Not like you do. If you lose, $10,000 on a stock trade, that money is gone. You don't get to say it's unrealized, but the banks do, $683 billion worth. While all this is happening, strange things are occurring in Los Angeles and some other places. Wells Fargo has had multiple customers come out and say that their savings accounts have vanished. Don't know what that means, but it's important to note. UBS in Switzerland is not giving withdrawals to their clients, publicly stating because of liquidity challenges. A few weeks ago, I went through talking about how three central banks who were in charge of printing money and managing monetary policy for the country, three of those banks are begging for $7, $10, and $13 billion to bail themselves out. These are the places that literally just authorize the printing of money. They're going broke. Why are they going broke? Probably from the derivatives market. But before I get into that, it's important to talk about Scotiabank, which is the second largest bank in Canada. Their net income this quarter was down 34%. Why are banks losing money? Well, here's why. Nobody can afford to borrow money, and they can't make a profit lowering rates. While rates are this high and inflation is this high, the demand for lending and credit is huge. The supply is very thin. So the way it works at banks is, in general, for a long time, you had to have $7 of depositor cash to lend out $1 in loans. The less depositor cash in the bank, the less loans they can make. It's just that simple. And we're approaching a time where this is going to be a very big problem. And it's illustrated by the commercial real estate market. So the commercial real estate market right now in Chicago, Boston, and New York City, 3 high-rise office buildings were just sold at 60% discounts from the price paid in 2015. Meaning they bought this building, one example was a $150 billion or $1 million deal in Boston, I believe, for a large 1,000+ unit office building in a beautiful downtown area. As an example, they paid $1 billion for it and that might not be the right number, but example, $1 billion for it in 2015, and they just sold it for $400 million in 2023. These types of opportunities for big investors are going to be available moving forward. I don't know if it's the right time because you still have to get a loan, but they're happening. The average mortgage is now 52% higher than rent. To give you a bit of perspective on this, that number, and again, if I own a house, I pay 52% more than I do if I rent a house. That's the basic equation. To give you some reference on this, in 2008, before the crash, that number was 33%. It's now 52%. Multifamily mortgage defaults are at an all-time high. They've now surpassed 2008. These are all lending issues based on inflation and credit. And we'll go into spending because that's important. This economy, along with almost every other economy in the world, is prosperous or desolate based on consumer spending. Are people buying products, goods, and services in the market? So let's take a look at that. Before we look at that, it's important to note that incomes are not matching what the government's telling us. And I'm going to go through all the government lies as I go through this. One of them, most recently, we hear all the time is wages are up, unemployment numbers are incredible, inflation is being defeated, rates are fine, the economy is great. Everything I just explained to you kind of contradicts that. Those are actual numbers. But more importantly, income. Let's talk about income. Right now we have a situation where 500,000 Americans have 2 full-time jobs just to make ends meet. I just went to the grocery store 3 days ago and I paid $16.40 for a box of garbage bags to use in my kitchen. Garbage bags were almost $17. These numbers are astronomical, yet they're telling us that inflation is being lowered every single month by the great, brilliant Bidenomics strategy we're seeing. But income, 25% of what are called normal rich people, People who make $175,000 a year or more, 25% of them say that they feel poor or very poor. Right now, the average family in America has to spend $11,434 more than they did in 2021 just to maintain their standard of living. That's almost $1,000 a month more just to maintain your standard of living. Now, there's two ways to look at that. Number one, it's really expensive, and number two, we try to live a much higher standard of living than we should in this country. So it's not always the fault of the government, it's also the fault of our spending habits. But that is really, really secondary to the actual problems being caused. So let's look at Black Friday and Cyber Monday. Those are two big indicators of where the economy is. Now, on Cyber Monday, $940 million was spent on Cyber Monday alone. Almost $1 billion was spent. And on Black Friday, the numbers were down about 6 to 8%. I don't know the exact number, but the numbers were down from last year's Black Friday. But the interesting thing about this is that buy now, pay later options on these websites, including Amazon, that spending level was up over 20%. And what buy now, pay later is a credit card on top of a credit card. That is stacking one card on top of the other, on top of the other. Government spending, derivatives, which we just went through the banks with massive amounts of derivatives. And if I haven't, I'm going to go through those in just a moment. But the derivatives market is really what this is. So you now have, I want to buy this stereo, whatever it may be, if people use stereos anymore. I want to buy this stereo, but I can't afford it right now. So I'm going to put the initial purchase on my credit card, and you're going to charge my credit card for the next 4 months for me to be able to own the stereo on its own. Not only is this risky on the consumer's end, they're buying something they can't afford, it's risky on the business's end. They don't know if that credit card will have enough credit limit to fulfill all 4 of the payments. Nonetheless, that spending is really, really bad for an economy when you have to use a credit card and have it ding the credit card 4 consecutive months to make a payment today or to buy a product today. 80% of America says that they feel worse off financially than they did during the pandemic. That's 80%. The average single person in this country is making $3,400 a month. Average rent in this month is $1,978. The average used car payment is $528. And between food, electricity, and fuel, you're looking at another $900 a month on average throughout America. You may be in California where it's more, you may be in Mississippi where it's less, but that's the average. So the average American, through their wages, is actually about $100 in the hole every single month. This is a really bad indicator of an economy, and it cannot end well. The only way out of, there's 2 ways out of it, and I'll walk through those at the very end. So when we have these massive layoffs being announced, KPMG has announced that they are going to lay off 12,000 people. Volkswagen says they're getting ready to lay off thousands. Lion Electric is going to lay off 10% of their staff. Lloyd's Banking is laying off 2,500 people. TikTok Gaming is laying off 1,000 people. And Maersk just laid off 10,000 workers. If you don't know anything about Maersk, you should. Their major role in the global economy is transporting cheap goods from China to America, and they just laid off 10,000 people. So that should give you an indicator of how well the economies of those 2 nations are going. Michelin just announced they're closing down all of their German factories. Germany is in complete disarray. Germany is the largest economy in Europe, and there's an old saying, as Germany goes, so does Europe. So Europe is in really bad position right now, and that position generally doesn't stay overseas, it generally comes here, which I'm pretty much explaining pretty thoroughly to you statistically. Now back to the banking sector. Comerica Bank, so if you bank at these banks, you should expect that in the next, call it 6 months, 12 months, that they'll be acquired by one of the larger banks who don't have any money, but they're gonna acquire them. Comerica Bank, First Horizon, and Zion were just put on a watch list for acquisition. What is happening, in my opinion, in the banking sector is we're looking at nationalization of banking, which is something they did in Moscow during the Bolshevik Revolution, they did in Germany. These things are happening in America. When Silicon Valley Bank and First Republic and all these other places go out of business and they get bailed out and then they get bought and acquired to keep running, that's a really bad scenario for a government, and well, good scenario for a government, bad scenario for an economy. Cigna and Humana are announcing a major merge. These are 2 roughly $50 billion health insurance providers. They're going to nationalize insurance. That's what it looks like to me. And probably the surprise of the week, in a filing from Disney, they actually quoted that they expect to lose money, which they are doing daily, because of a, quote, misalignment with public and consumer tastes. Yeah, we don't like what you're doing to kids at Disney, but it's starting to show. Now, back to the banking sector, because there's a big piece of the puzzle that people don't pay attention to when it comes to an overall economic picture, and that's derivatives. If you don't know what a derivative is, I'll explain it to you, and I'll explain to you how it can be corrupted. This is an ounce of gold. There is a paper gold market, there is a physical gold market. Physical gold, if you come to me and say, I want to pay you, by the way, an all-time high today, $2,090. So you can pay $2,090, I'll give you this gold. That's not how the gold market works when you're buying it on the stock market. Essentially what it is give me this piece of gold and I will create 100 contracts, basic contracts, legal contracts saying that at any time, give me the $2,000, I'll hold on to the gold. When you want the gold, I'll give it back to you. That's a derivative. It's a contract, a sale contract for an underlying asset. Could also be called tokenization or whatever have you. It's another form of derivative. It's not the thing that you're buying. It's a contract or a promise to deliver that good when the contract is called. The derivatives market is so much larger than all economies put together. It's kind of astounding. So I did a little research and I looked into banks to see how many derivatives they hold on their books. And this is a market no one talks about in any of the mainstream media. So here are the top 10 banks. These are just the top 10. This doesn't say every bank in America. These are the top 10 banks and their holdings of derivatives. Chase Bank, $58.9 trillion in derivatives. Goldman Sachs, 57. Citibank, 55. Bank of America, 23.7. Wells Fargo, 15. State Street, 2.5. US Bank, 1.7. HSBC, 1.4. And PNC, $1.1 trillion. Now, if you'll notice, HSBC has already gone through a restructure and merger in Europe. PNC is definitely on a watch list for the next failed bank. You can pretty much track derivatives to bank failures moving forward. These are astronomical numbers. The national debt of this country is $33.8 trillion. Yet Chase Bank holds $20 trillion more in derivatives and hundreds of billions in unrealized losses. Yet they're considered safe havens for your money. So this derivatives market is really amplified in silver. There's not enough silver in the COMEX to be able to deliver for anywhere near what is done on open contract. So there's no one will ever admit to this, but the average piece of gold or piece of silver, ounce of gold is resold 50 to 100 times. So there could be a big day, one day in the future, where everyone says, I want my gold and I want my silver. And these banks and the COMEX will not be able to deliver it. That is the cold hard fact of the derivative market, especially in precious metals. So that's an area to be in, because if there's not enough supply for the demand, the price generally moves. And today, gold hit an all-time high. I've been talking about gold for a long time. I've been talking about gold, silver, raw land, oil and gas investments, and cryptocurrency. Bitcoin is the best example I can give you. But if you look at those asset classes where they are right now, raw land is difficult to gauge because there's nothing built on it, and it's just a long-term play. God only made so much land, it's always gonna be worth money. Gold just hit an all-time high. Silver's approaching a 3-year high. Bitcoin is up 133% on the year. Cryptocurrency is a very tricky market. You really need to do research. There are some good plays in that market, but there are far more sneaky plays than there are good. But I would make sure, I will do a breakdown of this probably in the beginning of the year. I'm just way too busy with work. But there are those perspectives out there. Everyone has their own perspective. I'm just going off the biggest player in the space is Bitcoin, and it's up 133%. It has nothing to do with central banks. That money is pretty well sheltered and unconfiscatable. Now, we have to look at the energy sector, because where we sit right now as an economy globally is we sit in the same position as that 65-year-old man who's lived an incredible life. He's gone on 1,000 vacations. He's partied every night. He owns 2 cars. He's got fancy suits, all these other things. He turns 65 and realizes he can't retire because he didn't save enough money. This is the exact same scenario that natural resources find themselves in. Copper mines, copper is far undermined. Silver, most silver mining around the world has been shut down in the last 3 years because the price isn't profitable. Gold mining is starting to pick up with a higher price. Central banks all over the world except for ours, are stockpiling gold. The Dutch bank just came out and said that they have been working for 2 years towards a gold standard. I had the pleasure of interviewing Steve Forbes, and we talked for 15 minutes about the possibility of a gold standard or other standards that could be based on cryptocurrencies or what have you, but other standards beyond fiat. I hate to say this to those of you who don't realize this, but we live in a fiat system, a system of fake money. where a Federal Reserve can just print money, fake money, give it to you, you can spend it, and if you don't pay your taxes, they take your real assets. We live in a villain's world. That is exactly how our financial system is designed. And to give you an example, if you don't believe me, we had a gold standard in this country. We reduced it in the 30s. We eliminated it in the 70s. Immediately after eliminating the gold standard, knowing that we were now on a petrodollar, which is now completely gone, Saudi Arabia is not honoring that anymore, our currency is complete fiat. And the way that they get through this is they established consumer credit in the 70s. Then they created credit cards. Then you started using credit cards at places like Burger King when you couldn't afford $3 for a hamburger. Credit is an add-on or a final dagger in the world of a fiat system. I personally believe we're moving out of it, but it's important to understand how energy works in all of this. We are at a massive deficit in spending in natural resources. We've gotten gluttonous and we have completely forgotten how supply chains work. When I was a kid, my grandfather lived through the Great Depression, and he used to tell me, he could tell me how everything worked. In order to make a radio, you had to have plastics, you had to have plant matter and wax to make it, you had to have silver and copper to create the wires, and we've forgotten that. Most of our society thinks, oh, I have an iPhone, it just appeared out of nowhere. Well, in order to get an iPhone, you have to create 13 years of carbon emissions in the air just to mine the materials to make an iPhone. Cars are no different, nothing else is different, and you can't mine without energy. So recently, OPEC and Russia have announced that they're going to decrease their production of petroleum by another 1.5 million barrels per day. This comes at a very dangerous time when our country has been draining our strategic petroleum reserve. We now have 13, maybe 14 days of petroleum left in this country. So if we ever went to war or we had a natural disaster and we needed oil to fight or to survive, we would really have less than 2 weeks available in this country. We've been selling that strategic petroleum reserve to keep the price at the pump low so that people vote blue or vote red or whatever it is, just that they vote for a politician who's in charge. This is going to come to roost. There is no way around it. There is absolutely no escaping what is coming from a financial perspective. These types of ideas have been so poorly managed and so gluttonously heated in Congress or wherever you want to blame it on, that we find ourselves in a position where there is, and it's not just us, it's every country around the world. Almost every country in the world has a central bank that produces fake fiat money, and then we compare the value of our fiat money to other people's fiat money. So to give you an idea of how bad the energy sector is, Guyana, a little nation in South America, just discovered a big pocket of oil. They announced they discovered it. It was actually discovered 28 years ago. There's a white paper written about it. We all knew about it, but they just announced it. Today, December 1st, the government of Venezuela is having a meeting on whether or not they should invade Guyana. Think about that. One nation in 2023 is thinking about invading a neighboring nation for their oil. We've heard this story before. But what does that really mean? What does that mean? It means that right now, Venezuela, who is a nation in pure communism at the moment, our country, our government, has just relinquished almost all sanctions against buying Venezuelan oil. So what is about to happen, in my opinion, is that the government is going to buy cheap, dirty, gross Venezuelan oil, which is far, far inferior to US oil, to refill the SPR so that we can hopefully go to war in a foreign nation. And in order for Venezuela to keep up with that demand, they may have to invade a foreign nation and steal their oil. That's where the oil and gas markets are. And it's not reflective in the price, because the price of oil and gas, or pretty much anything, has futures. Futures are derivatives. Options are derivatives. The largest options and futures traders in the world essentially are sponsored and powered by major banks and central banks. I'll let you do the math on that, but just imagine a scenario in a $2 trillion market like oil. If I had, say, $500 billion, I could put a bunch of short contracts in there and tell everybody that oil's going down and people will follow suit and the price will drop. Or I could buy a bunch of long contracts and convince people that the price of oil was going up. That's how the derivatives markets work. Now, when countries like the Dutch are talking about gold-backed currency or gold-backed dollars, if we have sound money, there are two ways out of the situation we find ourselves in holistically. The first is to print more money, which just kicks the can down the road. By the way, this can has been being kicked down the road since the year 2002. Our finances have been like this as a country. They just don't tell you it because they want to kick the can down the road, keep getting elected, keep doing the same things, and keep lining their pockets. I find it interesting that about 80% of Congress are millionaires. These are supposed to be civil servants. About 80% of them are millionaires. Some of them are billionaires. You'd be astounded how many of them have dual citizenship in different nations. Really look into that. It's interesting. But we find ourselves in a position where there's two ways out. Print more money. Every time they print, we lose buying power. So you can, if they print, which they're probably going to, you are going to lose more buying power. Inflation is going to get worse, and they're going to continue to lie. Just like they did this past week with our GDP report. Miraculously, in this country, with all the statistics I just gave you, our government came out and told us that the GDP, the gross domestic product, the combination of all the goods and services sold in this country rose by 5.2%. I'm sorry, these are lies. I've avoided the word, but these are lies. And when you look at the GDP report, which I stopped doing, by the way, because I find the inconsistencies and usually around page 5, this one is blaring. Part of our GDP, 5.5% of our GDP came from government spending. So remove government spending, you have a contracting economy at 0.3%. CPI, they tell you CPI, or Consumer Price Index, or the inflation number in this country, is 3.5%. Yet, a box of garbage bags from my kitchen costs almost $17. So when you remove food and fuel from the inflation index, you get lower numbers. If you don't have to eat and don't have to go anywhere, that's the inflation number. True inflationary numbers in this country are probably over 20% by now, but there's only a few people even doing the calculations. If you're buying into the numbers that they're giving you, you're going to feel pain. Example is from today. Gold just hit an all-time high, and the first article from Barron's was, gold just hit an all-time high, but don't buy the metal, buy these stocks. I think we're looking at a really big awakening coming up in this country and hopefully all around the world to the other solution to this problem, which is sound money. Sound money can be achieved in many different ways. Scarcity is a big part of that. Stop printing, make it limited. Back it with something that's worth something. You know, if you look at investments and how to make them, because again, I've given you my 5 investment, which I've been talking about for 2 years and I haven't weathered. That's what I invest in. If you look at inflation and fiat systems and central bank currency models throughout all of history, beginning in the French Revolution, they all end in the same way. There's a great book called The Fourth Turning that I would advise all of you to read. It's a long book, but it's well worth your time, because I believe that we're in year 79 of an 80-year cycle. And they don't end well. They do change to something new, but there's certainly a battle that's going to occur for a new fiat system or for a sound money system. And as far as every person I know, again, I do these things because I want everyone to know this information, and I want you to start thinking critically, because if, as a country, we can come together and educate ourselves and lift ourselves up beyond the limits that are given to us in understanding our economics, then we can all have an impact, a useful impact. We should all be advocating for sound money, whether that's through some sort of digital platform or whether it's done through gold or any sort of precious metal backing. It's going to eliminate a lot of things, like the need for people to constantly invest their money. Think of why we invest so much money in this country. We invest because we have to outpace inflation. That's the whole purpose. If there was no inflation, investment, you could just save money and live a pretty stress-free life. But in a fiat system that we exist in right now, that is the major problem. So from what I see here, get your money out of the system, get your money out of the banks, invest it in things that'll produce income, that'll provide tax benefit. There's $30 trillion in taxes that are coming after. Shelter as much money away from taxes as you can, collect income, get that income out of the system, put it into some precious metals or crypto play or whatever you think, but get it out of the system, because the system is failing. And I don't want to see anyone harmed by the system failing. So depending on your level of risk, look at things that have a big spectrum. But the simplest way to do it is get your money out of checking and saving, get it into a money market account held by the Fed, look for some precious metals, look for some raw land if you have capital available, put some money in a crypto play, Bitcoin, something like that, be able to put it there and learn how to use it the right way. Learn what a cold wallet is, learn how to store these things. The value is there, but the value does not exist in a failing system. So once again, my name is Eric Rice. This is the Rice Report for December 1st, 2023. Thank you so much for paying attention to me for the last 29 minutes. It's a lot of information. I will be back to you here next Friday with another Rice Report, but until then, God bless you all. God bless this country, and God bless every decision you make, and I hope that you make very informed, very intelligent, well-discerned, informed choices in your life. So God bless you all, and I look forward to seeing you next week.